switching gears here. The return of student debt payments in football can make SoFi shares a touchdown. At least that's what Bank of America thinks. The bank raised SoFi's rating to a buy with a $9 price target. Let's get into this call with the analyst making it, BofA Securities Analyst Mihir Bhatia. Mihir, good to see you this morning. It is Friday. Let's have a little fun here. Take us through your thesis on how football and NFL could benefit the stock.
Sure. Good morning, and thank you for having me on. I think, the driver of our call, as you said, is student debt repayments coming back. The biggest thing on that, I think what investors should keep in mind is for the last few years, there's been really no incentive for borrowers to refinance their federal student loans. For SoFi, that's been a bit of a issue because, it's their most profitable product. It's a product that they've had the most experience in, and they were doing $2 billion of refinance volume a quarter. Now, with repayments coming back, borrowers are incentivized to look at other options, look maybe to lower their payments, change their terms. And keep in mind, SoFi really focuses on the super prime graduate school type borrowers. So we think that'll be a big driver and volume will bounce back from here. So I think that's the first call. And then the second piece of our analysis, we did some analysis with Google Trends data, with Sensor Tower data, looking at engagement, application usage of SoFi, app downloads. And it seems that, they really do get a benefit from their NFL aligned marketing. A lot of their marketing is aligned to the NFL. And we think that there'll be a benefit, again, similar to last year, this fall, where you'll start seeing some of that engagement increase. And SoFi has introduced a lot of products to monetize some of that increased engagement.
It's particularly interesting on the engagement, especially for the customers that SoFi has. What their executives have told us in the past is that for the number of people that would actually qualify for some of the student loan forgiveness, the majority of those that are on the SoFi platform or are engaged customers, they're actually above the threshold for income to even qualify. And so what might that relationship going forward with SoFi look like with that consortium of the consumers, and what do you expect the growth rate to be for that particular kind of that part of the pie of the end users that they have?
Sure. So you're absolutely right. Again, I mentioned, they focus on these, graduate school, professional school type borrowers who typically would have higher incomes, right? I mean, if you think of the caps on some of the income-based repayment plans, or even on the loan forgiveness at $125,000, you think that a lot of SoFi's borrowers are going to be above that cap. And then what SoFi has done is introduced a lot more products, right? Whether they now have a bank shot or they have a bank account, you can have your credit, you can have your primary checking account with SoFi, you can have a credit card with them. They've also introduced other products like home loans, personal loans. A lot of these they didn't have back in 2018, 2019, when they were doing a lot of volume. So I think a lot of those products is where you'd start seeing some of that engagement come through from borrowers, because if you think about individual's life cycle, right? I mean, they finish schooling, they go through graduate school, they start getting married, start thinking of buying a house, having children, so you're thinking of home loans, maybe you're trying to upgrade something in your house, you're thinking of a personal loan, you're consolidating your debt. You really start focusing on your finances, I think, a few years after you're out of school. And that's where SoFi is now going to have the engagement to drive some of that extra revenue for themselves from their existing customers.
Mihir, I'm always trying when we talk about fintechs to sort of place them in my mind in the financial ecosystem. And I wonder how you frame that question. In other words, a company like SoFi, how much are consumers turning towards fintech companies versus traditional financials right now? And what kind of market share and market shift overall are we going to see, say, in the coming decade?
Yeah, no, that's a great question, right? I mean, I think it really depends. I think you have to be careful. I would not dismiss the existing players by any means. I think, there's a lot of innovation, a lot of things going on even with existing companies. That said, you certainly have seen digital-first companies like SoFi, companies like SoFi, which are really focused on customer experience. One advantage that they do have is they don't have a lot of the legacy costs. They don't have lots of branches. And you do see certainly younger customers much more willing to engage digitally, not necessarily looking to go into a branch. And I think SoFi benefits from some of those trends. The other area where I think you start seeing some of the benefits is that some of these younger companies tend to be a little more nimble, a little more active. You see the CEO of SoFi on Twitter, for example, or hosting a podcast, and you see some of those just being a little more engaged, if you will, with their customers. And there are benefits to that. So, there has been a shift. There probably continues to be a little bit of a shift in gaining market share among some of these newer fintechs. A lot of times they're gaining market share from maybe, smaller banks and things like that, because there's certainly a lot of consolidation. There's a lot of room for consolidation in banking overall, right? So.
The only SoFi branch I know of has Stadium annexed to it. So we will see exactly how that NFL partnership pays off for them going forward. BofA Securities Payments Analyst Mihir Bhatia joining us this morning. Thanks so much, Mihir.
Thank you.